Old whales profit while young whales tremble in fear. Bitcoin plays out a plastic brotherhood. Ethereum's key indicators have hit a new low this year. Is this a sign of a market reversal? Ethereum falls behind? July's $5.4 billion in funding proves it wrong. If the United States hoards currency, I will hoard currency too. Can Brazil succeed by following the trend? Tether and Circle adventures in Hong Kong. Either give in or get out. Southeast Asia's crypto overhaul. Will the Philippines follow Thailand's lead in banning cryptocurrency exchanges?
Wednesday, August 6th, BitcoinTV English channel. Where is the coin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. Bitcoin appears to be holding steady at $115,000, but undercurrents are surging, a testament to the fake brotherhood market. The old whales with a cost price of $39,400 have already made a killing. Since the beginning of the year, they've adopted a Buddhist hoarding approach, neither dumping the market nor adding to their holdings, simply watching the action unfold. Meanwhile, the new young whales have an average cost of $105,300. Their situation is dire. The price is currently testing their cost point, and even the slightest dip could lead to losses. Their holding on could escalate into a desperate run, wiped out numerous leveraged positions. The current market is like a fully drawn bowstring. Old whales are watching, young whales are holding on, each waiting for the other to strike first. If the price can hold above $105,000, new investors will remain calm. A break below that level could trigger a whale run. If it breaks through $130,000, those old whales who have been watching the spectacle might swoop in and swoop in. Therefore, this is neither the end of the bull market nor the beginning of a bear market, but a crucial moment of life and death with the potential for a dramatic reversal at any moment. Don't be fooled by Bitcoin's current slump at $110,000. On-chain data has already betrayed its hidden agenda. The taker volume difference indicator has been quietly rising. It's like a mind reader in the cryptocurrency world. The purple line indicates a flat Bitcoin price, while the dotted blue line reveals that bulls are secretly stockpiling. Historical experience shows that whenever this indicator resurfaces from the red zone and rebounds, Bitcoin is always on the move. Now it's moving again, indicating that major investors are frantically buying the dip, with buy orders significantly outnumbering sell orders. While the price is still holding steady and hasn't broken through, those who understand. It's like a nerd saying, "I didn't study before an exam," only to find their backpack is full of notes. So, while the surface appears calm, there are already turbulent undercurrents. Bulls have been quietly laying their groundwork, waiting for a tipping point that will trigger Bitcoin's comeback. Ethereum's recent market trend has been quite interesting. It began the year languishing at $1,500, then surged to the brink of $4,000, poised to break through, only to falter at the crucial moment, leaving onlookers stomping their feet in frustration. Market sentiment is clearly flagging, with several key indicators sounding alarm bells. The taker-ask ratio has fallen to 0.87, a new low for the year, indicating that sellers are now significantly more active than buyers, with bears clearly in the driver's seat. Worse still, this indicator has been in negative territory since July 18th, suggesting bearish sentiment has been rampant for weeks. Technically, the 7-day and 30-day moving averages have both turned downward. The current situation resembles a tug-of-war, with bulls gasping for air and struggling to muster, while bears are pulling ever harder. Unless a sudden boost of positive news comes along, Ethereum is likely to continue its volatile stalemate in the $3,500 to $4,000 range. In these market conditions, short-term traders should buckle up, while long-term investors should relax and enjoy the show. The best is yet to come. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the past 24 hours. Click the bell to join our channel and become a member. You'll receive your membership code Monday through Friday. It's strange to say that Ethereum, the leading smart contract platform, recently experienced slower growth than Bitcoin and was even overshadowed by Solana, leading many to question whether it was lagging behind. However, the tide turned last month with the passage of the US stablecoin bill, and Ethereum immediately rebounded. In July, spot ETH ETPs attracted $5.4 billion, the largest single-month net inflow in history. Grayscale also quickly released an Ethereum report aiming to clear its name as the dominant player.
Yeah, so Bitcoin's value proposition is now, it has been really clear that Bitcoin is important, similarly to how gold is important when currencies around the world are debasing. Ethereum's future has always been ahead of us, but it's becoming increasingly clear that Ethereum's future is now.
The FTSE/Grayscale crypto index rose 15%, while Bitcoin rose 8%. Ethereum was the strongest performer, surging 49% in a single month and over 150% since its April low. The Ethereum ecosystem currently hosts over 50% of stablecoin balances and processes approximately 45% of stablecoin transactions. It also hosts approximately 65% of the locked value in DeFi protocols and nearly 80% of tokenized U.S. Treasury products. Projects such as Coinbase, Kraken, Robinhood, and Sony all prioritize Ethereum.
After this surge in the crypto market, it seems we're in for a halftime break, but don't panic. This isn't a cold snap, it's simply a breather after such a rapid rise. The current market is like a runner who's just finished a marathon. They need to take a break before continuing. Most importantly, policy is still pouring in. The White House has directly released 94 get-rich-quick schemes, 60 of which regulators can immediately implement. This is a slick operation. No need to wait for Congress to wrestle. The market can start moving straight away. Ethereum is in for a treat as institutional investors are gearing up to enter the market. The current pullback, it's a chance to get back on board. If you don't invest now, you'll be left crying, "Wait for me," when the market takes off again. Countries around the world have recently been frantically hoarding Bitcoin, launching national Bitcoin reserve competitions. Currently, the top 6 countries in the wealthiest Bitcoin holders list are the United States, China, the United Kingdom, Ukraine, Bhutan, and El Salvador. In March of this year, Trump officially launched the U.S. National Bitcoin Reserve Program, sparking a wave of international interest with countries like Kazakhstan, India, and Sweden all raising their hands to sign up. The most amusing case was Kazakhstan, which announced in June that it would use previously seized Bitcoin to replenish its treasury, a move that's practically like turning seized stolen funds into private money. Brazil, however, a rebellious teenager, is resisting the trend and is secretly developing its own unique approach, perhaps planning something new. This national hoarding war is becoming increasingly exciting.
Brazil's House of Representatives will hold a hearing on August 20th to discuss a bill proposing the establishment of a national Bitcoin reserve. This bill, proposed in November 2024, would require Brazil to allocate up to 5% of its treasury funds to purchase Bitcoin. Based on the central bank's total reserves of approximately $300 billion as of February, this would amount to approximately $15 billion. At least 6 institutions will attend the hearing, including the Central Bank of Brazil, the Ministry of Finance, a cryptocurrency advocacy association, and representatives from fintech companies and the banking industry. The bill will then undergo deliberation in the House of Representatives and the Senate, and ultimately be signed into law or vetoed by Brazilian President Luiz Inácio da Silva.
This bill has not even been drafted yet, but Brazil is already in an uproar. Supporters are calling it a digital gold strategy that can fight inflation and break the hegemony of the US dollar. Opponents are directly scolding the country as a leak, worrying that if they buy at a high price, they will lose billions. Experts are also worried and remind them that although Bitcoin is bullish in the long term, its short-term fluctuations are more exciting than a roller coaster. If they buy at a high price, the national treasury will lose billions in minutes, and the people of the country will probably have a collective heart attack. And the United States, the US, and the IMF have long frowned upon state cryptocurrency speculation, and Brazil could face potential setbacks if it pushes back. However, some stubborn believe that the current global chaos requires a decentralized safe like Bitcoin. In short, this national cryptocurrency experiment has spread from parliament to the financial world, and now even diplomatic circles are getting in on the action, a true crossover between House of Cards and the Wolf of Wall Street.
Tether and Circle adventures in Hong Kong. Either give in or get out. Tether cutting meets Circle rushing to get a Hong Kong license?
Hong Kong's stablecoin ordinance officially came into effect on August 1st. Although USDT and USDC can still be used, they are already on the verge of collapse. Tether and Circle. If you don't submit your application or sign your indenture by October 31st of this year, you'll enter a death countdown starting November 1st, and you'll be forced to pack up and leave by the end of January 2026 at the latest. While you can currently use old user benefits to get through a 6-month grace period, truly staying is as difficult as the current situation that caused Bitcoin to fall below $1 million. The application process alone is enough to make them question their lives. This isn't a come, go market. Now it depends on whether these two stablecoin giants will live on their knees or die on their feet.
我们要做好这个产业的发展呢，有2大的非常重要的抓手，一个是标准，一个是平台。然后 Web 3.0标准化协会主要就是希望把这2个事情能够结合，而且呢，充分的发挥它标准跟平台化的一个功能。
Hong Kong's stablecoin ordinance requires issuers to convert 100% of their reserves into cash or government bonds and deposit them in approved banks or trusts. Executives must undergo background checks and anti-money laundering checks, and users must undergo real name authentication. The HKMA has made it clear that it will not issue licenses this year, and the first batch is expected to be 2026, released at the beginning of the year. Only 3 or 4 places are available, tending to support cross-border payments and Web3 application. Current USDT occupy Hong Kong 82% market share. USDC, the foundation, is also solid, and it is extremely difficult to complete the data completion, structural adjustment and internal control upgrade in a short period of time.
These licenses have become very popular. Traditional large institutions such as Bank of China, Hong Kong, and Guotai Junan Securities have been eager to grab a seat. Tether and Circle. This is embarrassing. Tether Circle needs to break up its global business into pieces to be a good student. Worse still, there's not even an office. They now have 3 options. Either stubbornly adhere to regulatory compliance and become 3 good students, switch to over-the-counter trading as a cram school, or simply become gangsters and enter the shady business, though that's a matter of seconds. For now, retail investors can still trade over the counter, but if exchanges continue to list unlicensed stablecoins, they could face fines of up to 5 million yuan and 7 years of room and board. This wave of moves is clearly intended to purge the local stablecoin market, and with it, the anonymous DeFi ecosystem. What will be the final outcome? When the first licensed exchanges are announced in 2026, we'll know whether USDT and USDC receive a graduation certificate, or a dismissal notice. Southeast Asia's crypto crackdown is in full swing. Indonesia took the lead, drastically increasing the offshore exchange tax from 0.2% to 1%, a five-fold increase. Don't have a local license? Good luck. Thailand went even further, shutting down 5 cryptocurrency exchanges, including Bybit and OKX in May. The Philippines, wondering if its neighbors are all this ruthless, is also preparing to take action. In this wave of crypto policy earthquake, who wants to win easily? First, they need to overcome the compliance hurdle.
The Philippines SEC has issued a notice accusing several exchanges, including OKX, Bybit, KuCoin, and Kraken, of operating without registering in accordance with new regulations implemented in July. Citing Memoranda No. 4 and 5, the SEC emphasized that these platforms' provision of services to local users is in violation of regulations. Others named include MEXC, BitGet, Femex, CoinEx, Bitmart, and Poloniex, and the list is expected to expand.
Bongbong Marcos administration, we grew by 6%, one of the highest in the world. And that's because interest rates are still high.
The Philippine government sees the crypto industry as a source of financial support. On the one hand, the SEC has issued stern warnings, not only issuing cease and desist orders to unlicensed platforms like OKX and Bybit, but also potentially escalating the situation to criminal charges. On the other hand, it is collaborating with tech giants like Google, Apple, and Meta to radically disrupt advertising and app distribution on unauthorized platforms, completely shutting down these borderline platforms. Binance was already delisted in the Philippines last year. This move has finally made many users pay attention to platform compliance. Coupled with increased vigilance against potential tax evasion channels like crypto trading and stablecoin payments, policy risks and tax pressures for crypto assets are increasing in Southeast Asia. This isn't a localized tightening of regulations, but a regional regulatory testbed. Only those with a strong track record will survive.
Has the White House found its conscience? A new report suggests that Bitcoin miners may only need to pay taxes when they sell their coins, finally eliminating the need to pay taxes both when mining and when selling. Tether Boss personally revealed that every chain is now giving USDT. The transaction fees alone account for 40% of the entire network. 9 chains, including ETH, Tron, and SOL, are collectively crying out for help. Regarding the rumor that JD.com will withdraw from Hong Kong stablecoins, the official directly slammed the table. We are busy applying for a license, so those who spread rumors should stop. Data shows that 100 companies have stockpiled nearly 110,000 bitcoins, and last week there were 20 join the rush to buy digital gold. Coinbase launched the embedded wallet function. Now developers can integrate self-hosted wallets with email addresses without even having to remember the password. Web3 Alipay.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.